Hey, what's up? It's Emilio Despirito, and this is the Wealth Architect Podcast. I'm so excited to be here with you each and every single week. My team and I have hand-selected our guests to come on the program to talk about how to build wealth financially, mentally, physically, spiritually, right? There's so much that goes into building a lifestyle full of wealth, and we hope that this content really reaches you, not only in your brain, but in your heart, and that you could do something with this. So thank you so much for tuning in. God bless you, and we're going to have a great show. Hey, a special thank you to our sponsor, AnnieMac Home Mortgage, whose Cash to Keys product is disrupting the industry. Sick and tired of finding the perfect home, not having your offer selected? I got to tell you, it happens all the time. With Cash to Keys, AnnieMac gives sellers a cash guarantee for each of their buyers' offers. Stop bidding and hoping. Instead, bid with AnnieMac and bid with confidence. Don't just bid, but win. AnnieMac Mortgage. Have you ever heard of upfront underwriting? Well, I haven't until I started working with Movement Mortgage. Movement Mortgage is one of the top loan originators around the country. Specifically, I want to give a thank you to Matt Bates. And if you're lucky enough to live in Rhode Island, Massachusetts, Connecticut, or New Hampshire, I strongly suggest you contact Matt Bates at rimortgageguy.com. Again, rimortgageguy.com, and he's going to help you to find that dream home. He does upfront underwriting, which means they fully approve you for a mortgage before you even place offers, increasing your chances of winning that dream home. rimortgageguy.com. Hey, welcome to the Wealth Architect Podcast. This is episode number 17. I'm Emilio Despirito, and this is your show all about creating wealth through mental health, physical, spiritual, and financial, all of that combined. And we're interviewing folks to talk about just that. So today we've got some great guests. We've got Garrett Sutton, as well as his son, Ted Sutton. And I'm going to introduce both of them to you here. They're both attorneys. Garrett is a leading corporate attorney, a best-selling author, and one of Robert Kiyosaki's original Rich Dad advisors. I'm sure you've heard that name before, and maybe you've read the book. Garrett has spent over 35 years helping entrepreneurs and investors to protect their assets, from corporations to building lasting wealth through smart legal structures. You've probably seen some of his books like Start Your Own Corporation, Loopholes in Real Estate, and Scam Proof Your Assets, staples in the libraries of serious investors and business owners alike. And joining Garrett is his son, Ted Sutton, a licensed attorney practicing in Wyoming, Nevada, and Texas. Now, Ted brings a fresh and sharp legal perspective to the family business with expertise in asset protection, estate planning, and Corporate Transparency Act compliance. He's already making a name for himself, and I'm excited to have both of the Suttons on the show with us today. Welcome to the Wealth Architect Podcast.
Thanks, Emilio. Great to be here.
Yep, Emilio, thank you for having us on.
You're welcome. I'm excited to have you here. And, I know that our listeners are too. So we're going to dive right into it because I know time is money and I'm sure you got places to be. So let's get to it. So Garrett, this one's for you. You've worked with thousands of clients. What separates the business owners who build generational wealth from those who struggle year after year?
Well, the business owners who build generational wealth kind of have a long-term vision, right? They're doing it for their future and in many cases, their family's future. And if you're going to take that long-term vision, you need to understand that you need asset protection in our society. There's all sorts of people out there now that sue for anything. And, you can't help but notice all the billboards out there, in a wreck, get a check.
Sad,
and
yeah.
So we aren't going to change that. That's considered free speech, that lawyer advertising. But knowing that those type of people are out there, and the FBI has identified a subclass of people who are professional litigants, the people who will look for a puddle on the grocery store floor, and instead of telling someone to clean it up, they'll fall. Those people exist in our society, and you just need to take steps to protect yourself with the proper use of LLCs and corporations. And if you are looking for the long term, you certainly want to use these protective entities in our litigious society.
Yeah, I agree with that. We see it all of the time. And you're right, those billboards keep popping up. They must make some pretty good money because those billboards are not cheap. So while we're talking about the legal and the asset protection, because it's that's one thing that I see a lot of entrepreneurs just kind of skate past, right? Because like we're one-sided, like one-minded, right? We're just like in go mode, but people can definitely get hit. It's a liability. So what's the most common mistake that you see that leaves business people wide open to lawsuits?
Yeah, well, in my short legal career, one of the things that I've noticed is that they fail to follow the corporate formalities. So, what that means is that they set up an LLC. And since many of our clients are entrepreneurs, they're in go mode, they're focusing on the next deal, they tend to forget about the LLC itself. And so, because of that, it's important to have team members who can help with all that. So, these are things like paying your annual filing fees. There's a lot of people I've met who just set up an LLC once and they do nothing with it after that. So, you need to make sure that you're paying the annual filing fees and that you're keeping separate records for your LLC. So, this is having an operating agreement, having annual minutes, things of that nature. And so I think a lot of people, at least what I've seen, is that they're in go mode and they sort of forget about all the legal documentation that they need.
Mhm.
And when they don't have it and their business gets sued, it's going to be much easier for that vexatious litigant or that claimant to pierce the corporate veil to reach their personal assets. So it's really important to have somebody on your team who can help you with all that, because if you're in go mode, you can focus on that. And then, your lawyer or whoever else can help with all the paperwork.
Great answer, Ted. Thank you. Now, would you suggest that the LLC is the best and first legal structure that they should consider, or is there something better?
Well, in most cases, you're going to be using an LLC for a couple of reasons. First of all, the good states like Nevada and Wyoming have really good asset protection associated with LLCs. Secondly, your taxation is flexible. The LLC can be taxed as an S Corp, which can minimize payroll taxes, a C Corp, which can pay for healthcare premiums as an expense, as a partnership, or as a flow-through, a single member flow-through entity. And you'll work with your CPA on this. But the LLC offers all sorts of flexibility with regard to taxation. We form pretty much, 90 to 95% of our formations are LLCs for this reason. If you have to form a corporation, there's some states like California, to be a real estate broker or an attorney, you have to operate through a corporation. If you're going to operate through a corporation, Nevada is the best state because it has extended the asset protection of the LLC to the corporation. And it's the only state that has. So there's some wrinkles to this, but Emilio, the general answer is the LLC is the most popular entity these days.
All right, it makes sense. Because I know a lot of people when they're starting, that's one area that they overlook, as we discussed in the beginning. And it's just something that they really need to get on right away. I think a lot of people when they're starting businesses are afraid of failure. And so they're afraid to invest that money. And then they're just like you were talking about, Ted, they're in go mode and they never backtrack to do it. Right. So that's something that we would suggest all of our listeners to be involved in, is to form an LLC, to speak with an attorney and get that going. What's the biggest misconception about LLCs, and how can misunderstanding it cost someone everything?
I kind of covered the misconception where they think that an LLC formation is a one-time deal and then they don't have to worry about it anytime thereafter. So in order to have that liability protection, you need to have the ongoing maintenance there. So I think that's one misconception.
The other misconception is people starting out think that the LLC is too expensive to form. And it's not. We charge not thousands, but just hundreds of dollars to set up an LLC. And you have to look at the LLC like an insurance policy. All right. You don't want to go into business without having the proper insurance. The LLC is the insurance that if you get sued in your business, if you maintain it, like Ted says, you're going to be protected from any claims reaching you personally. So the misconception that the LLC is expensive or difficult to operate is out there. And, to be honest, too many CPAs say, well, you're just starting out. You don't have the money to form an LLC. And that's really bad advice. I mean, we joke that CPA stands for cannot protect assets. I mean, the CPA should always tell you to set up the LLC.
Never heard
it's
that.
just another form of insurance.
And that's something too, right? Like when you're starting a business, you need to have all these professionals in your arsenal. You have to have a great attorney. You have to have a great CPA. You have to have a great real estate advisor. You have to have a great barber. I need a haircut myself right now. And and you know what? You have to have really great people in your network.
It's like Robert Kiyosaki says, business and investing are team sports.
They are.
And, you need to have that team around you. The attorney, the CPA, the business broker, maybe the hair cutter, I don't know.
Yeah.
But, you want to have a team to help you because like you were saying, you're in go mode, you're going out, you're getting the business, but you need that team in the background to make sure that you're structured properly, that you're filing your taxes properly. You don't want to get in trouble there. And that you're operating according to the law. I mean, in some states, some jurisdictions, you need business licenses, and Emilio, they don't teach this stuff in school. And a lot of people will learn the hard way that they start a business and they don't have a business license they need. So you need to, look into all of these issues before you get started. And again, it's not that expensive to be properly structured, to have the right team members working with you. This is just something that should automatically be done.
It's an investment. There's nothing better than having the right people on speed dial because we're making some big decisions. And the further you go in your business career, you're going to be making bigger decisions and you're going to be dealing with bigger problems. And the bigger problems that you and your team can solve, the more money and the more wealth you're going to create. Real quick, I want to tell you why I said the barber. Because their ear is to the ground and they know what's going on in the street, right? So if you have a barber in like a really great area, you got everyone tells the barber everything. So be careful what you tell the barber, but you can listen to everything. Yeah. So that's why I said that. So let's get back into business strategy and wealth building. So how important, I see people do this all the time, how important is it to keep personal and business finances separate?
Oh, it's huge because, if a veil piercing claim were to come, so that's where your business is sued and they get a judgment against you and they try to reach your personal assets by piercing the corporate veil. Mm-hmm. Commingling of funds is the easiest and most common way to pierce the corporate veil. So when you set everything up from the beginning, setting up an LLC is like the foundation. It's like laying a foundation for your house. You need to have everything in order from the beginning. So you have the paperwork, you're properly filed with the Secretary of State, and then also you get a separate business bank account for your LLC. Mm-hmm. And when you start doing business, you start paying income and expenses out of that one business bank account. So you need to treat things separately because if you don't and you get sued, it's going to be really easy to pierce the corporate veil. Wow. So just treat everything separately from the beginning. And if you do that and you have meticulous records and you're careful and you're mindful of everything, then you should be okay when that lawsuit comes.
Here's a quick example. You have a business bank account and you have a personal bank account, but you're paying for your groceries and your rent out of the business bank account. That's not a business expense. No. What you need to do is pay yourself a salary from the business over to your personal account and then pay all your personal bills from your personal account so that you're not commingling money. And like Ted says, they pierce the corporate veil frequently. It's about half of all cases where someone goes to pierce the corporate veil. The business owner has not followed the formalities. They've commingled funds. They haven't paid their annual filing fee to the state. And in half of all cases, they're able to pierce through the corporation and get at your individual monies. That is not a good sign. People are not following the corporate formalities like they should.
Wow. And with the right advice, the right guidance, you're not going to fall into that trap. I've never had that explained to me before. And I've been in business for, almost 15 years here in real estate. And I've never had any attorney explain that way. So that was perfect. Garrett, this one here is for you, because you've said before that the structure you choose determines your success. And I know we were talking about some of the different structures, but can you explain how choosing the wrong structure could limit your wealth?
Yeah, if you use a entity, for example, maybe you set up a corporation or an LLC, and you set up as a C corp, where you have the double taxation. And with a corporation and LLC, you can be taxed as a C corp.
Yep.
But in the long run, you're going to pay far more in taxes using the C corp in many cases than you would being taxed as an S corp or as a partnership. So, structure is really important at the start. You don't want to get into a structure or a taxation that is going to cause you to have to pay a lot more to the government than you need to. We all have to pay our taxes and all.
Fair share is
fine. The tax code is a series of incentives.
That's right.
They put incentives out there to invest in real estate, to invest in businesses. And of course, we're going to take advantage of them. But if you use the wrong taxation method at the start, you're going to be behind the game. So we want to set up the right entities, corporations or LLCs. We want to get advice from our CPA and others on the right taxation. And then we're going to want to do it right? You want to make sure that you're paying those darn payroll taxes, which are, 15.3% of your salary income. So we want to make sure that you're paying those payroll taxes, but we don't want to overpay them. We want to pay you a reasonable salary, pay the payroll taxes on that, and then everything after the payroll taxes on your salary flows through as a distribution without the 15% in payroll taxes. So these are all important issues. And again, they don't teach this in school, unfortunately. You have to get the book, like Loopholes of Real Estate, or Start Your Own Corporation. Robert Kiyosaki told me to hold up a book every time.
Yeah.
So
I've never seen him do that before.
No, I never do that.
Never once.
You have to get this information on your own, and because they're not teaching it in school.
No. And people are hungry for it. And that's why we have, this show here. And I was talking with somebody the other day, and I forget who it was. And we were talking about how schools need this, and schools really have to be teaching our children this, because so many people are coming out of school lost, not knowing what to do, can't even balance a checkbook, if anybody does that anymore. Right. And it baffles me. People don't even know how to buy a home.
Well, and then AI is going to be wiping out a lot of jobs. And so people really need to start getting smart about how they're going to navigate this new economy.
Oh, yeah.
And if you have no sense, if you have no financial education sense, you're just making it even tougher on yourself.
That's right.
So it's time to get educated. We have a channel that we've just launched called Tenero, and it's financial education for kids and adults. We have some great kids series coming out. Tenero, it's on YouTube, and it's free content. It's sponsored by Corporate Direct, but we want to educate people, because again, the schools just aren't doing it.
Yeah, that's fantastic. I love that you're doing this. Ted, this question's for you. So growing up around Garrett Sutton, what's one principle that Dad had instilled in you that you now carry to today's practice?
Well, I think the biggest thing is that you need to provide value first, and then the sales will come second. Because there's a lot of people out there, I think we all see them on social media. I'm not going to name names. And it's not everyone, of course. But there's some people where it's sales first, value second. But I think it's important to provide some sort of value first. Just because, we're in this to help people, we want to establish trust with them. And then once we do that, then, they become our clients. And so if you lead with value first, I think the better results are going to come from that, because I think you're doing it for the right reasons. And then when you do that, it's kind of like good karma, and then good things happen down the road.
Yeah, we have a saying here, just give more than you expect to get. And we don't give to receive. It's just part of it. It's our culture. We're in a culture of reciprocity. That's some really great stuff. So now I'm gonna change hats over here. Look, I'm a father too, Garrett, and my son has taught me more than anybody or anything out there, right? So, what is one thing that Ted taught you that you take with you and apply every day?
Well, that's a great question. What has Ted taught me?
I feel
I mean, he taught me to be a good father.
It's the hardest job in the
Bring
world.
someone into the world, your responsibilities go up by a magnitude of 10 or 100.
Oh yeah.
So he taught me that. My wife has been a great mother to him, and the two of us have just enjoyed the joy of Ted being in our lives. But when he arrived, I had to get serious. I mean, I was now a father, and that was an obligation, a responsibility that I never had before, and I take it seriously.
Yeah, it is. It's the most serious job that we have, and we need to be bringing up great people. And I love this. I love that you have a family practice here, and I myself am building a real estate business that I hope my son. He's only 7. His name's Emilio the 5th, and I keep telling him you're going to have a boy, and he's Emilio the 6th. So now he tells this to people. You got to brainwash them when they're young, right? Keep the tradition going. But
The 5th, that is a great family tradition.
yeah, and we're keeping it going. But yeah, so legacy is huge, and it's so important. So, a question for you on legacy, right? So, as the next generation of a legal professional, Ted, how do you see the world of asset protection evolving over the next decade?
there will always be a demand for it. Just because, people understand that when they have assets, they need to protect it. So it's fairly static. But I think with AI, we're going to see things rapidly change in the future.
Oh, sure.
AI is going to wipe out a bunch of jobs. I think that just stresses the importance that people need to have assets, just because there are a lot of people that aren't going to be able to depend on one primary source of income. And so, we'll see what happens. I mean, it's kind of scary to think about, but because you could see a bigger gap between the haves and the have-nots in the future. And I think the haves are just going to need to just have the structures in place to protect themselves.
Well, the have-nots are going to see the billboards. I mean, I think there's going to be an increase in litigation.
Right. Yeah.
So I think people need to just understand that right now and know that if you don't have that duplex in an LLC, if you're operating as a sole proprietor instead of as an LLC or a corporation, you need to take steps now, because I foresee litigation to go up in the future with the onset of AI.
And if you're reading in between the lines and you're a business person, and if you have nothing else you can do, you should become a personal injury attorney, because there's going to be there's going to be a larger need for that. Let me ask you this, okay? And by the way, I don't think it's all gloom and doom with AI. I think, there's so much more opportunity that's out there we don't even know yet, and people are going to really come up through the ranks that wouldn't have, and are going to be able to accumulate massive wealth in a far more efficient way. So I think it has a lot of positives, but the traditional type of jobs, several of them are going to be going away, right? Like, look at taxi cab drivers with Uber, for example, okay? So what do you think? I'm curious, Garrett, we're going to start with you. What 3 to 5 jobs that you see on a daily basis today do you find are going to be going away within the next 5 to 10 years?
Paralegals. I think the paralegal jobs are going to go away. Certainly truck drivers. I mean, they're going to be these autonomous rigs. 3 million truck driver jobs are going to be lost. I worry about AI, I guess, more than others.
Yeah.
But to have everything, all our nation's commerce run by machines instead of actual human individuals is concerning to me. In terms of other jobs to be lost, I think anybody who is involved in writing, copywriters, people who make ads, people who write books. I mean, AI can write books now. I have to say that Ted is coming out with his book in February. It's a great book. It's called Greenback's Book of Law, where we have a dog teaching the law to kids.
Love it.
8th to 12th graders. And we asked AI for what would be a good tagline? And I got to be honest, the AI came up with a pretty good one. What is it, Ted?
Yeah, so it's legal knowledge unleashed.
because
Great.
it's told by a dog.
Because it's narrated by a dog,
Yeah.
and it's teaching them all the things that I learned in law school.
Oh, that's funny.
And so, and that's another topic that they don't teach about. I mean, they don't teach financial education, but they also don't teach the law. And because kids don't know the law, they can get themselves into lots of trouble.
That's right.
I know someone who caused trouble at a local high school, and he's facing jail time because he messed up. And the irony is I gave him a copy of my book, but he didn't read it. So, it's important for kids who are in middle and high school, because they're just about ready to become adults, to have some sort of understanding of our legal system.
And the beauty there, Emilio, is that he has a card game to go with it. So you read the book with your friends, and then you have a card game where you actually, cement the legal information in your head.
I love that.
As Robert Kiyosaki says, you learn better through games than anything else.
I bought my son Cash Flow. We play that. He loves it. It's so fantastic. Yeah. Ted, when you're ready to put the book out there, I think you said, what was it, January, February? We're going to have you, if you'd like, we can have you come back on, and we can give an autographed copy of your book to one lucky listener. And Garrett, if you'd like to do that today, I mean, we could also, give one copy of Start Your Own Corporation.
The two best ones for your audience are Start Your Own Corporation and Loopholes of Real Estate. And these, I will sign one for one of your listeners. Just let me know.
I love that. That's awesome. So all you have to do is just tag us in the video and share this segment right here. And go ahead and send us a message with any question for Garrett, and we'll go ahead and put you in queue to win one of those books. I think that's fantastic. Thank you. Autograph too. That's amazing. Well,
we've done a survey, and when I autograph the book, it's worth 10 cents more.
Oh, I love that. Yeah. I love that. And because of this show, it's now worth 11 cents more, right? So that's great. I make a joke, and I always say, hey, you know what? I've got 3 listeners, myself, my mom, and my dad. And it's not true. It's getting some pretty good eyes and ears, but yeah, they are. Let's talk about loopholes in real estate, because I find that pretty interesting, being in real estate myself. And I find that so many Americans, probably roughly 75% of millionaires, have come up through real estate of some sort, whether it's rentals or, triple net, like commercial deals that they lease out triple net, or real estate investment trusts, or some sort of the other. They're involved in real estate. So I'd love to learn about some loopholes here. What do you think, Garrett? What do you think the number one loophole in real estate is that people miss out on all of the time?
Well, real quick, just to explain loopholes, it started with castles, and you had a little slit where you could shoot an arrow out, and then the slits went to the bottom of the castle, and you could escape through a loophole. And so that's how the term came into the language.
Love that.
The loophole is an escape or an advantage for those who are in the know. So we have tax loopholes that open up with the tax code, open up and make investing in real estate good. Mm-hmm. We have legal loopholes that you want to close because of the unlimited liability you can have if you don't use an LLC to hold title. But to your question, I think one of the biggest loopholes out there is the tax code. I mean, the tax code gives us depreciation. It gives us bonus depreciation. It gives us the 1031 exchange. Mm-hmm. There are so many tax loopholes to take advantage of. And that's what the book goes through, is all the advantages and that you can take. It's part of the tax code. It's for everyone. The tax code is not for rich or poor.
Correct.
It is for everyone. And so, and some people have this negative thought about loopholes. There's nothing wrong with loopholes. It's there to help you advance your wealth generating goals. But at the same time, the loopholes, the tax code, is there to encourage people to engage in rental real estate. The government tried government housing years ago, and it was a huge failure. The government did not take care of the properties. No. They were just rat holes. And so the government decided prudently that if we change the tax code to encourage investors to invest in rental real estate, we will provide good housing for everyone. And so that's what the tax code intent is to provide good housing for everyone. So that's what the book is about, is how to take advantage legally of these tax and legal loopholes.
That's fantastic. What do you think is the largest obstacle right now in someone's way that's starting out? Let's say somebody's starting out, they're buying properties, they're building a business, whatever. You could take it wherever. What is the largest obstacle in front of Americans' way right now to build up?
Well, I'll let Ted answer, but mine is money. I mean, if you're buying that first property, you gotta go to the bank, you got to have good credit, or you got to get friends together to syndicate, and you have to follow the laws for syndication. But that said, plenty of people have done it. They figure out a way to get it done, and then they're on their path, right? Once you get those first or second deals done, you will be able to find the money. You want to do it right. And know at the start you're going to make some mistakes, right? I mean, it's not going to be perfect, and it's okay to make a mistake, right? But in the future, you want to learn from the mistakes. You want to have that money available so you can continue to increase your real estate net worth.
Very good. Ted, what are your thoughts?
Yeah, I think money's certainly one of them. I think another one is analysis by paralysis, where, people tend to overthink something. And, when they do that, they get cold feet. So in real estate, for example, they're analyzing a certain market and they just overthink things and what can go wrong. And then they decide to eventually not buy a piece of property. I think the biggest thing you can do is just do it. Just go ahead, do your first deal, and you'll learn stuff. You'll make mistakes, which is totally fine. But if you buy real estate now, it's going to appreciate over time.
That's right.
So me personally, I bought a piece of vacant land in North Carolina last year. And I just said, you know what? I'll just go ahead and do it. It's my first deal. I'm going to learn a lot. And, whatever knowledge I learn there, I can take with me moving forward. And so I think I'll probably sell it here in the next few months, but, I'll use that knowledge I gained to eventually buy a property somewhere else. The biggest piece of advice I have is just to get started. I mean, you'll make mistakes, things will come up in the future, but I think you just get started now, you do it, and then you learn from your mistakes, and then you just take those moving forward. And then eventually you can acquire more real estate and more knowledge and more wealth in the future.
Absolutely. I love that. So many people get caught up in all of the details. And do you remember back in the day when we had circuses, they had those white tigers, were they called the Siberian tigers, I think? And do you know how they tame them, how they stop them if they start getting vicious? They take a stool with 3 legs and they point the 3 legs and they spin the stool at the tigers, and the tiger will stop because it has analysis paralysis. So I think about that every time that I'm overthinking on something, and you just got to go with it. So well said, guys. Thank you so much, Garrett and Ted Sutton, for jumping on with us. I'm very excited to read your books, Garrett. I love that. I think it's fantastic. And I would entice all of our listeners to pick up his books. The ones I want to mention are Start Your Own Corporation, Loopholes in Real Estate, and Scam Proof Your Assets. And you can go ahead and Google Garrett Sutton and you can find his list. I believe you wrote 11 books, Garrett. And Ted has a book coming out too in February. Ted, we're going to have you back on the show if you'd like in February with the card game to present that as well to our listeners. Gentlemen, thank you so much. If you're listening to this podcast, you either own or will own a home, a car, and need life insurance. That's why you should check out our friends over at Lapointe Insurance, LapointeINS.com. These guys are the best in the business. They can help you if you're in Rhode Island or Massachusetts. And let me tell you something, his dedicated team of professionals are there to assist you and meet you where you're at. You never feel like you're being sold. You felt like you're being helped. It's a family tradition over at Lapointe. Check them out, Lapointe Insurance. Episode number 17, The Wealth Architect. I'm Emilio Despirito, and we've got a great guest with us today. We have Rich Brandariz with AnnieMac. Now, Rich is a manager. He covers the whole region down here in southern New England. He's got some fantastic programs, which are going to be important for builders, developers, as well as any real estate advisors that are listening to this show. Some really unique programs that they brought to the marketplace, and our clients, again, whether they're builders, developers, or realtors, homeowners, are really crushing it with these. So I wanted to highlight you and your programs. Welcome.
Thank you, Emilio. Thank you. Thank you for having me on this gorgeous New England day. It's 80 degrees out there, not a cloud in the sky, zero humidity. So I enjoyed the ride down here to your beautiful office here in East Greenwich. Thank you for the lead in. Our Cash to Keys program really has taken the market by storm, and it's happening here in New England, and it's happening across the nation. And we kind of saw that we were going to have some issues with supply up here specifically. And so this program has been really a niche product for buyers to be able to come in, make offers, and give those sellers and their agents a cash guarantee with no mortgage contingency. That's whether you're a first-time home buyer, you're a second-time home buyer but don't have a house to sell, or you do have a house to sell and you don't want to make a contingent offer. So our Cash to Keys program with specifics, cash offer, and buy now, sell later, allow buyers to come in and really strategically place themselves above other offers.
So I love that. That's brilliant. We've been putting that into place. It's been working very good. So basically, if you're a homeowner, right, and you have to go out to the marketplace and you need that cash from the equity of your home to purchase something new, you don't have to leave your current home as a contingency. You can go in with the Cash to Keys program from AnnieMac, and literally they give you cash to go buy a home. And I think within 2 weeks of purchasing, closing, and moving into your home, then you have to have your other residence on your original residence on the market, right?
That is correct. Yes, Emilio,
Wow.
that is exactly correct. We try to
That's
make
wild.
it pretty flexible. Our owner, Joe Panabianco, was ahead of the market when he started taking a good portion of our profits from the last couple of years, putting them to the side and creating AnnieMac Private Equity Group, which is how we fund these deals. So some other companies are trying to copycat us. They're trying to use insurance policies or bridge loans. We don't have to do any of that. It's proprietary to the core.
It's cash on hand.
Yeah, it's cash on hand.
Wow.
We provide you proof of funds. You know, we've got so many millions in there at a time.
All right. So I'm a homeowner or I'm a realtor and I'm listening to this program and I'm like, you know what? That might work really well for my clients. Like, is there somebody that you think is best fit to qualify? Or are there some people that won't qualify for it? I'm sure. Can you kind of go over the stipulations, like the requirements for it?
Yeah, sure. No problem. So we ran some models as we beta tested this program before rolling it out to everybody, put about 1,000 loans through that. And we found that 83% of all buyers will qualify for one of these two programs.
Wow.
So we really wanted to be an inclusive product, not a stretch. We didn't want it to be a marketing gimmick. We wanted it to be something that we're actually going in, offering and using. So with the cash offer aspect, and that's for your buyers that don't have a home to sell, right now that is just an absolute no-brainer. You just need a 640 FICO score. We can do VA, FHA, conventional loans. It's all single-family properties, second homes, and investment properties as long as they're single-family. And really just is a fabulous product for people that want to come in. What we found is here in New England, we're still seeing 5, 6, 7 offers, especially on those kind of entry-level first-time home buyer properties, you know, that price range. And there's just so many people who want to get in their first property. The demand is far outpacing the supply, and we wanted our offers to rise to the top. So, you know, a while back, people were moving the underwriting portion of the process. You know, you'd get a contract in, then underwrite the loan. And a lot of us took that underwriting and shifted it and put it before the contract. So that was our first way of standing out. Okay, this is a completely vetted pre-approval. And, you know, an underwriter's been through everything. We should have limited problems, but you still had a mortgage contingency. You still had an appraisal contingency. So, you know, those things were still in place.
And the contingency to sell, which is rough when you're going out there against cash buyers or buyers that don't have a home to sell.
Absolutely.
That's a really good tool to have in your arsenal if you're in real estate or if you know somebody that is buying real estate. I want to thank you for that, by the way. I want to jump over to the developer and builder portion. And by the way, if I'm a builder, if I'm a developer, I want to be working with a real estate advisor who has connections like AnnieMac, who works hand in hand with banks and companies like AnnieMac that have solutions for all of these. Because if I have a buyer coming in and they have a home to sell and my new construction is contingent upon their home selling, I'd rather have a certain cash offer in hand. And that's what AnnieMac can do, which is fantastic. But let's talk about the programs you have for builders and developers, because with lack of inventory in some markets, the spur of new construction is rising. So what do you have for builders?
Yeah, so thank you. I appreciate that.
Welcome.
And, I do want to also point out that you are always looking for the best partnerships for your office and your consultants and advisors. So, thank you for partnering with us. We're happy to provide some products that give you a strategic advantage. Yeah, we certainly developed this program with builders in mind. So if you think about this, builder starts the process, he's going to buy so many supplies, he's going to keep them on hand, and then he's going to start going through, whatever the development might be, and he's going to guarantee a certain property to a buyer, and they're probably going to customize it a little bit.
Sure.
You're noticing people want to customize. So if you think about it, while there is going to be an earnest money deposit, that buyer is really still on the hook. I'm sorry, the builder is still on the hook because he's now built a customized home, and that buyer may have to sell a home in order to do that, and they're not going to sell that home to purchase the next one until they're sure the builder is going to be on time. Or if they don't even have a home to sell, they're a new buyer, you want to make sure they don't do anything in between. So that's where our Cash to Keys program that matches up with builders. Builders are loving this. They get a guarantee that when they finish that home, and even if they finish that home early, Cash to Keys and AnnieMac will come in and purchase that property no matter what, so that they're not worried about tying up some of their finances or inventory into the property. They know they've got a guarantee. So we've taken that. That was the first step, and then we've taken it a little bit farther. We've done 3 different things to take it further. So we have teamed with the largest aggregator of building supplies. The big 4 would be siding, roofing, lumber, and windows. And we've teamed with them, and they are the largest aggregator of supplies here in our country. And basically they have so much capital on hand that you can buy from them. And we usually realize about a 15 to 18% discount on your supplies. Teamed with AnnieMac, where you can now create savings for your builders, where it seems like we're tightening the belt every single day for these builders and their profits.
So if a builder is working with AnnieMac on their project, so if you're financing the land and the new construction of, let's just say, like 20 condos or something, just give or take, right? You're going to go ahead and connect them with this distributor of supplies, okay? And they're going to save 18 or so percent, 15 to 18%.
Yeah, we've seen around 15 to 18
on supplies. So that's gonna directly hit their profit margins in such a big way. Like,
correct. And then
huge.
what we'll do is we'll take it a step further. We'll team with them so that we can create a credit partially from the builder who's now realized these savings, and partially from AnnieMac, where the buyers that use AnnieMac and go to these different developments will receive around a $10,000 credit, again, depending on the value and the purchase price of the home, but about a $10,000 credit to use AnnieMac and purchase directly with us using the Cash to Keys program.
Now, if the buyer doesn't, all right, so if the builder doesn't want to subscribe to that $10,000 credit, is that a stipulation in the program, or are they able to say, hey, no, we don't want to take part in
Nope,
that?
you can do it either way. Yeah,
Okay,
total
all right.
flexibility.
And so the reason why I'm asking is because, like, depending on the market and availability, some sellers, like in Florida right now, there's a lot of available properties. So like builders might say, hey, we'll give you a $10,000 credit. So if I'm a builder and if I'm in Florida, I want to save money on my overhead, right? I want to bring more profit to the bottom line, and I can give a $10,000 credit to buyers.
Yeah,
that's a no-brainer. That's great.
Let me take it one step further, actually. I'm glad you brought up Florida because that's an excellent area for this example. We've also started working with our builders to provide something called rate relief, where we will buy down and discount the rate for the first 2 years of the mortgage, working together with the builder, again, using some of the savings that they've now created using our financier and our supply company, as well as AnnieMac participating so that you can have a lower rate for the first 2 years. You're seeing some of these builders who have committed to large projects down in Florida, and the markets have slowed down a little bit. We don't see that here in New England, but certainly down there, markets have slowed down a little bit, but builders are already committed. So what we want to do is work together with them so that they can tease a much lower rate for their buyers for the first 2 years, as we all, and it's coming, wait for these Fed cuts that they keep promising us.
Yeah.
We keep chasing that, promise. But until we get there, this rate relief is making a whole lot of sense. So that's another way that we're giving back to our builders.
Well, that's fantastic. That's really good. So I'm curious, right? Because there's so much talk, and the Fed was supposedly supposed to cut rates earlier on in the year. That got kicked down the road. There's talks about September rate cuts. And while nobody knows, you and I have been in the business a long time, there's speculation. Let me ask you this, 2 questions. Number one, what happens if the rates don't cut? Like, where do you see the market in places like Florida or California where there's already inventory? Do you think it's going to get worse? Do you think more inventory is going to hit? More people are going to want to sell?
Yeah, I think we're at a bit of fork in the road. This is sometimes a thin line that we're going to walk here with infringing on politics. So I'll do my very best to stay away from that. But love him or hate him, Trump is a real estate guy and always has been. I do believe that if he's going to try to shake up and loosen up the economy a little bit, one of the largest aspects, whether it's Trump or anyone else in the White House, is the real estate aspect of our economy. And Trump being in that, in his background, I really think he's going to focus and look to loosen up some funds. So they didn't cut the rate last time. Trump let him have it on social media like he loves to do.
Oh, yeah.
But
it's entertaining.
I think if they hold off, there's a lot of kind of financial indicators to let us know that they will go through with the first rate cut. I don't think it's going to be a large one. I think we'll probably see about 1/4 point.
All right.
Yeah, which trickles down a little bit to, your everyday buyers. It will trickle down, takes about 2-3 weeks usually after the cut. But if they don't cut it, I think we're going to find ourselves in a particular situation here, because in other areas of the country, we are starting to see that supply is going up and demand is going down. And
that's right.
I think, people are just concerned with the cost of living right now.
Delinquencies are going up in some places. And, and I hear a lot of people, like, I'm sure you get this too. People are trying to time the market, right? Time the market. What's your feeling on timing of the market? Waiting for those rates to drop to move in, to build homes or to purchase home. What's your feelings on that?
Please stop doing it.
Yeah.
It's not working. I've had so many people tell me, I spoke to them about a year ago and they said, I'm going to time the market. It's going to come down. And now the same property they want is $50,000 to $60,000 more.
Yeah.
So it's about getting in, getting something that you can afford, starting to make payments, looking to lower your rate when the market offers that to you. But really just getting in, building wealth, as we do here on the Wealth Architect podcast.
That's right, man. That's right.
Starting with real estate.
Thanks for the plug.
Absolutely. Oh, you got it, my friend. Starting with real estate, I could not tell you that is a cornerstone of your portfolio. Do it right away.
Yeah. Stuart Siegel, he is the CEO of Engel and Volkers, right? The Americas division. He said he's been in this business for 40 years, right? And he said he has never, ever seen anybody fully be able to time and hit the market on what they thought. Like, you can't time the market. This is a gentleman who runs one of the largest real estate companies, okay, and is saying this, right? So like that tells you something. And the whole point of that is don't try to wait for the perfect deal. Just go in and get a deal. Go in and make a deal, because real estate over time is compounding like everything else. And you might lose here and there, but ultimately you're going to win more, and and if you make some mistakes along the way, you pick up and you keep it moving. But,
absolutely. And with real estate and creating passive income, whether it's multi-unit properties or, these Airbnb and VRBO have really opened a new income stream for so many people with single family homes and vacation areas. it really is it's pushing us all. Listen, get into the real estate market, purchase something, get some passive income coming in, let it help you pay for that debt while you manage the rest of it. And, like we've said, those rates will come down at some point and you'll be able to take advantage at probably a much lower cost.
So Rich, let's say that the rates come down, okay? Where are the benefits? What happens when interest rates come down?
All right, so interest rates are going to come down. That's going to open up affordability for millions of Americans. So when you're looking at the prices increasing and rates not coming down, they're looking at their dream homes and just saying, I can't afford that where I used to be able to. Rates come down, that opens up a lot more options for everyday Americans. But what does that also do? That also tells other people who have been sitting on the sidelines that it's time to get off the bench. The rates have gotten much better. Now they think they can afford things as well. And so now we've added to the already high demand of the market. So while you might be able to afford a little more people are going to come in to look to buy. And what happens when demand goes up? Those sellers are going to say, well, there's so much demand. Maybe I'm going to increase the sales price of this $25,000, $50,000 because people are looking to buy now that they can afford it. So again, like you've said from the very beginning, you cannot time this stuff. It's more about making wise decisions, working with your real estate consultants to be guided in the right way. They're the professionals. Stick with their opinion and purchase something that makes sense for your budget.
Perfectly said. One thing that I want to leave our listeners with is if you are in a market where the inventory is maybe 70% or less of where it should be, okay, give or take on that number, 70% or less of where it should be, and talk with a local real estate advisor to find out. That's a market that's going to lose a ton of inventory when the rates do go down. So the time to purchase land, the time to start getting ready to build, if I'm a builder, if I'm a developer, if I'm an investor, is going to be around now. You're going to want to get in there around now because you're going to have less competition going in finding this land. You're going to get great deals on the materials, okay? Great financing, and you can put this together with fewer people and just in time for when I believe the rates are going to go down. Now, if they don't go down, because again, you can't time the market, we were just saying, they're going to stay pretty consistent probably. And again, it's all speculation, but if they do, you're going to sell your product given the region if you're in a place where inventory is 70% of what it should be. Okay, so just some words of advice. I've been selling real estate 13 years now, and I'm building myself and investing, and I see that as an opportunity and a potential. So awesome.
I would agree with Emilio, and that's why you're one of the leaders of our industry here in our area. I couldn't agree more. And just a word of advice for buyers. Everybody loves those new properties that just hit the market, but like I said, everybody loves those. So think about something that might have sat on the market for a little bit and figure out why it might have sat. Maybe you can make an offer that's so many thousands under where they're listing at right now. Maybe you can save some money by making a lower offer and then take yourself a renovation loan and bring that house up to where you want it to be. Or you can work with the seller to get yourself rate relief, as I explained earlier, to bring that payment down. So there are ways to make wise decisions. Don't time the market, but be smart about it.
And over time, you're going to make your money back in real estate, specifically investment real estate. Single family homes is more like a break even by the time you sell it, which is like a savings bank more or less than an investment. But that's a story for another day. Awesome. Rich with AnnieMac. Thank you so much, Rich.
Thank you for having me, Emilio.
Appreciate you and your programs. I truly hope that you found some inspiration in either one of these segments. I'd like to thank our guests, Garrett and Ted Sutton, attorneys out of Nevada. Fantastic. Pick up one of their books. And also Rich Brandariz with AnnieMac. Thank you so much for tuning in. God bless you. We'll see you back here on The Wealth Architect next week.